Good evening. This is Tom Alexander. It is Wednesday evening, November 17th. It's about 7:05 p.m. Eastern time in the U.S. And we have a special situation that could be setting up here. And you can see on my, well, let me show you my screen. You can't see my screen yet. So about a week ago, I suggested that, okay, maybe we go higher, but because of how auction markets develop, that process of development, we weren't going to go higher at the rate of change that we went up from October 10th, 11th into that November 8th high. That was a certainty. And we sort of stopped on a dime, and now we've been chopping around and churning for a while. I said this past weekend, I think that we will trade to new highs in one or more of the indices. I still think that, before there's anything significant to the downside. Now, the clock is sort of, the market is sort of on the clock there. If we start to see weakness now below yesterday's, not today's session lows, but yesterday's session lows, the lows of Monday, then that would imply a test of that low right here back on the 10th. But unless we see a low below Monday's low, then I think we're going to see higher highs in the ES and or NASDAQ at a minimum. Now you can see you already have divergent disparate activity between those two indices and the YM and the Russell. And you typically get this at market turns of any significance, that being say 5% or greater. You also get the signal that I'm about to show you, or in that I put in the report. And this is, I put this chart in the report. It's a 30-minute chart. It's S&P cash. Breadth closed right here. It closed negative 1134. Now, in a bull trend, that typically marks pivot lows. So we really should not trade very much below today's session lows for long, by much or for long, if this scenario is going to play out. So the scenario would be if in the next couple of days we do trade up into new high ground, new all-time high ground, especially if it's in the S&P. I would still execute the signal if it's just the NQ. Even though, and I get the correlation between NYSE breadth and the S&P 500 and the NASDAQ, I understand all that. Just trust me on this. It's something I've worked with for 36 years. But if we do trade to a new high in the S&P and or NQ, I would be alert for a reversal if breadth is rather tepid. And tepid, I define that as plus 500 or less. And quite often at these turns, you will actually see the market trading to new rally highs, and in this case would be new rally in all-time highs on negative breadth. That could easily occur. Now, if that occurs, it's not just a hit the mouse and let's sell everything and we're going to get rich quick. You guys know it doesn't work that way. That will create a divergence, and it could be resolved in a bullish manner. So you have to be wise and prudent and strategic with how you trigger yourself into the trade. There are a number of different ways to trigger yourself into the trade. At that point, you could go short. If it takes out the low of the day to that point, you can go down in time frame and take out if it takes out an intraday pivot, that type of thing. That's beyond the scope of giving you the alert of what to be looking for. Now, in our live trade room, we'll be covering this in real time. But I want to show you, I want to spend just a minute. And, you know, I'm constantly giving the warning about using breadth, the price breadth relationship in trying to pick tops, because it can go on and on and on and on, divergence after divergence after divergence. And this is not that. This is a very specific situation. First of all, it's a very mature trend. I mean, we've been straight up since October, especially the middle of October. And the rally is showing not just in terms of breadth is showing divergences between the indices as well. So there are things that are adding up that are not just, okay, there's a divergence between price and breadth, let's sell it, because trust me, this doesn't work that way. If we go back and we look at, and I'll do that, I'll show you. Let's go to last November. And we were a lot lower last November, obviously. Here we go. So we had this ripping market that was up. And this is basically the chart I'm showing you is the S&P futures continuation contract, but day session only. But lasts from the very end of October into the spike high, and this occurred on November 9th. Okay, so we've topped on November 8th so far this year. We're up 13%. So, and I can assure you, if you go back and you listen to, or you go back and you find the reports that I sent out at that point in time, I was saying the same thing then I'm saying now, that may go higher, but this rate of change won't continue. And you can see we did indeed go higher. Now, the other part of this that I'm always talking about, you know, trading can be a much simpler process than most people make it out to be. We had consistent higher lows and then tests of previous pivots, but that occurred all the way up. And the rate of change continued all the way into, first time we had anything significant was in February, middle of February. So that could continue. However, along the way, you know, the market did become more two-sided, which is more of a tradable situation. You know, there were 2 or 3 days in here where you could have found significant opportunity on the short side as well as the long side. As a matter of fact, intraday, you were as likely to get a good short as you were a good long. And I think that's going to be the case going forward here, but that's another topic. I want to show you though. Now this is about, I'm not going to be able to get hit dead on. This is about the zero line in breadth. And if you look over here, right in here, and actually it did it here too a little bit. Breadth, the rally went to a new high here. And then you had this expansion, and this isn't a great one because not much happened. But in this area right here, you can see breadth flirted with negative territory as the rally was making new rally highs. And you had a healthy little pullback. And then at the larger degree top over here in February, you had the same situation that occurred. So this is the type of thing that I would be looking for over the next couple of days, guys. We will be covering this live in the live trade room. And if it does occur, I'll send out another quick report. You guys have a wonderful evening. Hope you found this helpful.